That's
What's
the
that?
technical issue that we've had this year.
Is it?
Yeah, first one.
No, I remember we had one. Oh, that was this year. Yeah,
This
okay.
year.
I'm
Come
with
on now.
you. I'm with you.
We
Our
made
first
it,
technical issue this year. Yeah.
we made it all the way to the 31st of the month.
I remember we had a really crazy one last year. I don't remember what. Remember, it was just so crazy. We had one.
Well, we had a
But
fire alarm once. Fire
oh,
alarm in our
that's
building.
what it was. The
I,
fire
I
alarm.
had to
That's what it
leave.
was. That's what it was. That was something. All right, guys. Well, thanks for showing up. Sorry we're getting a little bit of a late start. Again, we had a little bit of a technical issue with the go-to, but you guys are here now, and I think we can just go ahead and kick in. So we're already 3 minutes past the top of the hour, and I know everybody's busy. We don't want to keep you from doing what you got to do, but we appreciate you showing up on this ongoing webinar series with Angel Oak here at the National Real Estate Post. Just some housekeeping items. We'll go ahead and start with that, then we'll dive into the presentation. Number one, we always get asked, is this being recorded? The answer is yes, it's being recorded. But I would tell you this, don't count on it. Just because things happen, GoToWebinar is about 99% of the time it works fine. Once in a while though, man, it just doesn't work. So let's not count on it. So take your notes, put down the cell phones, don't look at the email, pay attention. The other thing that I wanted to tell you guys is that there should be some sort of a GoToWebinar or GoToMeeting little icon on your home page, on your computer screen there somewhere, where you can click on that. You can type questions into a question section. And I would just say, go ahead and ask your questions as we're going through this presentation. We're going to try and motor through this one. And then at the end of it, we'll go ahead and field some questions for you. Don't worry if we don't answer your question on this webinar, because the list of the questions gets sent straight over to Angel Oak, and then their account executives will get a hold of you to answer your questions directly. So don't worry about that. I feel like I'm forgetting something on the housekeeping, Tom. I feel like I'm missing something.
I think you covered it, Frank.
I think I
We're
covered
good.
it. Yeah, I think I covered it. So, all right. Well, with that, let's go ahead and I'll introduce you here to Tom Hutchins. He's the EVP of production over at Angel Oak Mortgage Solutions. And he's going to go through it. We are going to go through, you guys, talking about actually working residual income in the mortgage industry. And just to clarify, this isn't like you're going to do a loan and every month they're going to pay you on the mortgage payment. That's not what we're talking about. But by making use of non-QM products, you will absolutely build in an ongoing residual income for yourself. No problem. And we're going to kind of go over the concept here and then show you other things that you can do while you're going through this process, where you could even get more business out of this strategy. So with that, I'll hand it over to you, Tom, but I'm here to just talk through this with you. Let's go ahead and get started and start showing these guys what we're talking about.
Sure. Well, I'll just start. Thanks again for the intro, Frank, and thanks to everybody that's joining us today. But yeah, just kind of an outline. We're going to talk about the residual income piece and just kind of fly through that so you understand what we're talking about. But then really the meat of the discussion is about the follow-up strategies and how to use non-QM to grow your pipeline, because ultimately that's what everybody's looking for all the time, but it seems like even more so now. And we came about this whole residual income through conversations that I was having with some of our best customers. And we've been doing this for over 5 years now, and so we've got some customers that have been doing this with us for many years. And so it was just a real interesting concept about the residual income. So with that, and then like you had mentioned, even Frank, for people to send in their scenarios, we're going to cover a couple scenarios to give you a better idea of what non-QM really looks like. But please, if you know of some loans that you're looking at, go ahead and send those in, and we'll try to get to them today if time allows. So
sure.
Good. We ready to jump into it, Frank?
Let's go.
Okay. All right. So the exit strategy are non-QM and residual income. And really the key to that and where this came from is that, people that are in the insurance business, a huge advantage of that is residual income. But one thing that happens to us in the mortgage business, we have a month, and today's a great example. Today's the 31st. But where are we all going to be tomorrow? We're all going to be at zero. So,
right.
Residual income just doesn't really exist in the mortgage business. But non-QM can actually be that residual income. And like you said, Frank, it's not about payments and that type of residual income, but it is about doing the same loan more than once, or doing multiple loans for the same non-QM borrowers
Right.
as they progress. So really, that's kind of it. You close a portfolio product, a non-QM loan, then you set a calendar reminder that tells you this person, based on their situation, they're going to be ready to do a refinance in 2 years, in 18 months, whatever their scenario is. But knowing that exit strategy is a critical piece. And when I was talking to this one particular loan officer who does this very effectively, and it's a part of his business every single month, I asked him, I said, well, do you have some like high-tech CRM, some relationship management tool? And he said, no, I just go to my calendar in my email and I set it for 2 years from now. And I'm like, oh, wow, that's not really, but that's how easy it is.
Yeah.
So, you go in there, you set the reminder on whatever tool you choose to use or you use to manage your business, and that's it. And so the non-QM loan, the exit strategy from that non-QM loan, that's the residual income that we're talking about. So
yeah.
did I paint that good, Frank?
Yeah. And I just want to try and, I just want to keep you guys tuned in here, because I just want you to think about this. It's like, okay, we all need a deal today, right? We all need a deal today. And you know what? We're going to touch base further on in the presentation today. We're going to talk about how do we get the deal today, right? But let me tell you, you need a deal 2 years from now too, right? We all need deals 2 years from now. So what we want to focus on here is looking at, okay, if I can ramp up my non-QM business like today, start ramping it up today, I'm storing away the goods for myself 2 years from now is exactly what I'm doing. So every month that you add to your non-QM business going forward from this point on, that just starts to steamroll 2 years from now, if that makes a lot of sense.
Yes.
We all need business 2 years from now, right? It's going to be really nice to know that regardless of what's going on, 2 years from now, it's like, oh, look at that. I've got 6 people to refi this month because they got to refi. They want to refi. They know we're going to refi. We've been talking about doing the refi. I got 6 deals built in this month, 2 years from now. And then, Tom, then we go, let's then look at it 3 years out. We're still originating non-QM business the whole time, right? So now we're looking at 3 years out. Now I've got even double the refi business. So, it's just really something to take in mind. And there's other ways that we can pull more business out of this. And we're going to show you how to get this non-QM business too on this presentation. So stick with us. But this is the concept here. So let's go ahead and move on.
Well, and I think before we move on, just something that's really critical, and where this came out with the conversation that I had with this loan officer is last year, 2018, we know was kind of a transition year, a tough year for a lot of originators. This person's business was up 30%. And I was like, how is your business up 30% in the current market? And he said, non-QM, because of the residual, these exit strategies, these refinances, plus new non-QM. So he's building the residual. He's enjoyed the residual last year, but he's also closing new non-QM loans. So he's building his residual for next year.
Going forward, right? For going forward. So that's the beauty of this.
So it's not, you're not too late, but you have to do that and really be glad. You're going to thank yourself a year down the road. So
yeah. Let's go on.
Anyway, best practices. I think the exit strategy is really the key. If you go back to that formula, it's non-QM plus the exit strategy. That's how you get to the residual income. So knowing that exit strategy, not only does it help you for the future, but it's how you structure the loan up front. When you're talking to a borrower, and let's say, the rate it's not going to be perhaps a Fannie Mae rate because of their situation, you're going to need some tools to even have that conversation with the borrower. So what you're doing is you're giving them a solution to get into that house, to buy that house today at today's prices. But then the exit strategy is what you talk to them about. Okay, but 2 years from now, I'm going to get you off of this loan and into an agency loan or into a prime jumbo loan. So you're kind of painting the picture from the very beginning. Set that exit strategy before you're even processing the loan. We already talked about calendar reminders. So the calendar reminder, the key is when do you need to refinance this borrower? But you also need to set reminders along the way. You can't just lose touch with this borrower, right? You don't say, okay, 2 years, I'll call them and they'll be ready to go. You need to have a strategy around that. Wouldn't you agree?
Yeah, no, we'll talk about that. Yeah.
Yeah. So 45 days before the anniversary, you just reach out to them. So it's coming up. So you start setting the stage. Okay, we're getting close. Let's find out what's going on. Let's start gathering the documentation. Let's get ready to do that next loan. Poor habits. I think that's something just to bring up, and it's really what we've already been saying, but it's you can't forget about these borrowers. You have to stay in front of them. Set some reminders so it's not just 2 years later, because if you wait until that time, they could have made other contacts, other loan officers, friends with, whatever. So habit is to be proactive.
You have to be in touch with these guys, and we're not talking about, like Tom said, a super crazy CRM thing. And we'll talk about it here. We're touching base on it, but we'll talk about it more here. But you've got to kind of set that all up right at the beginning. So the loan is closing. You're setting up your follow-up points. It's going to pop up in your calendar. You're going to know I'm just touching base. But that's so important to stay in front of them and engage with them, because anything can happen between now and the refi date 2 years from now. And if you're not staying in touch with them, I'm sorry, but somebody else is going to be talking to them. And it's just going to be a blow it on your end. So let's keep going.
Yep. Same kind of deal. A poor habit would be just to forget about the borrower. If you forget about that borrower, what you just said, Frank, was perfect. Somebody else will not forget about them.
Right.
So, and to me, it's like set it up at the very beginning. Hey, I know you're going to be clear of this in 2 years. I'm probably going to touch base with you every quarter, every 6 months, just to check in on you and see how your situation's going. So they're not going to be surprised about it. But it's the proactive piece that I think is so important.
Mm-hmm. Definitely. Yeah.
So let's kind of dive into just follow up more.
Yeah, I think this is kind of a clutch piece. I think in the industry, in our industry, we have really gone to great lengths to find a way to not actually engage with people. Okay, we have really worked hard at finding out how can I communicate things to people and not actually talk to them, right? And I think in this scenario and in the industry in general, I think we're absolutely blowing it here. I think it's a big fat mistake. Okay, I think we need to use our technology to remind us to engage with people. And when I say engage with them, I'm not talking about an instant message. I'm not talking about a text. I'm not talking about an email. I'm talking about, hi, how you doing? You know what I mean? That's what I'm talking about. Because if we can do that, we have a far higher probability, okay, of making sure that we keep these guys in our fold, right? And keep them in our pipeline and keep them in our follow-up systems and get this residual income and get this next loan that's coming up. So with that in mind, let's talk about how we ensure that we're going to engage these people. And we have to engage. We have to engage, Tom. It's all about engagement, man. It's all about, first of all, obviously, Tom, you talked about this. We close the deal, right? Yep. Don't pass go. Get to the calendar and start scheduling your stuff. First thing we're going to schedule is the day that we plan on starting the application to refinance this borrower. We're going to set that in. We're going to send him a calendar reminder. You should do the Google Calendar event, right? And invite your borrower to the Google Calendar event, right? So that he can agree to it. So it shows up on his calendar, you know what I mean? To do the refi,
I love that.
Right?
That's awesome.
That's what we should do. Right. And we should be talking to him. We should be talking to him. Like, I got him. Okay, I'm going to set the calendar date to do this thing right now. How does this? I know it's 2 years from now, but typically 6 p.m. is good for you and whatever. You know what I mean? And get that date set. And we want to set that right from the get-go. We do not want to. This is the kind of thing that we can blow, Tom, if we go, oh, okay, yeah, okay, well, I'll set a time and, we'll get to you. And then tomorrow comes and we forget. The next day comes, we forget. And the next thing you know, we forgot. Right?
Yep.
So immediately, let's do that.
Love that.
Yeah. then we need to schedule these quarterly calls, right? I mean, we don't want to, you know, personally, if it was me, I'd do it minimum quarterly, minimum to follow up. And it's just like you said, Tom. I mean, we have to engage on this follow up. Don't just do an email, guys. Please make the call. And there's a big reason to make the call that we're going to talk about here on the next slide, okay? Because if we can make the call, not only are we ensuring that we still have this rapport and this bond and they know it's us and we're there to help them, right? Not only do we have that going on, right? And we're reminding them of our upcoming date, whatever that's going to be, but there's now new opportunities for us because we need to look at these guys as not just a single refi, Tom. We can't look at these guys as a single refi. We need to look at them as something else because here's the truth. These guys with this loan, right? It's a good loan. They know that it got them in the door, but they're thinking about that exit, right? It's on their mind, okay? In the back of their mind, it's kind of always there. And since it's always there, these guys kind of have a little bit of their real estate radar up. Does that make sense? They kind of always kind of just thinking a little bit about real estate and mortgages, right? Which brings us to the next slide, which I like to bring up is that when we do engage with these people, what do we talk about? Well, just small talk, man. You don't have to have a script. You know what I mean? Scripts are, I mean, I appreciate scripts, Tom, for the idea, right? But I feel like a script for me is going to be something I'm going to go, okay, I get the idea, but I'm going to just have my own way with it. You know what I mean? Have my own way with it. And so for me, guys, when it comes to this type of follow-up, literally all you're doing is say, hi, how's it going, man? How you doing? Just thinking about you. Just want to touch base with you. Everything good? Right? That's what you want to do. Another thing, you get a voicemail, don't leave that information on the voicemail. Okay? That's a missed opportunity for you. You get a voicemail, you go, hey, it's Frank, man, at the ABC Mortgage. Give me a buzz about your loan. Okay? Guaranteed you're getting a call back. Guaranteed.
Yes.
Right? You're getting a call back. Right? So when they say, oh, hey, man, yeah, what's up with the loan? I said, yeah, nothing. I just want to make sure we're going to let you know, haven't forgot about you. I know we got a refi date in 18 months or whatever the day it is. I just want to make sure I still got it on the calendar, man. I just want to see if there's any changes, anything happen, or you got anything else going on because you want to be talking to them, right? You just want to feel it's just small talk. That's just all you're doing. Just engage, right? But the clutch thing is before you hang up, ask them for a god darn referral, man. You're going to be with these guys. You're going to be with these guys for 2 years on a 2-year game plan, a game plan that they're participating in because you told them we're participating in it. They're ready for that 2-year date. And now you're staying in touch with them every few months. They know we're on track. We're on the game plan, right? So when we engage with these guys, we want to keep continually just remind them that we're here to help them or we're here to help anybody that they might know with the things that we provide services on, right? With any mortgage, any purchase, any refis. A simple script. I think we have it on the next slide. It's just real simple. And this is your closing, right? This is when you hang up the phone. So we've got our little small talk in the beginning. How's the kids? Oh yeah, mine go to soccer too. Blah, blah, blah. Right? Yeah, okay, don't forget. We got this coming up. We got it. We got it in the calendar. Just when anything changed, everything's still the same. You all good? Everything's still good. Say, okay, man, it was great catching up with you. Before I let you go, just a reminder, I'm just trying to help as many people as I can right now. So with that in mind, is there anybody that I can talk to who just might need my help? I mean, oh, and also, just so you know, with this in mind, there's a lot of down payment assistance available out there for first timers. A lot of people don't realize that. So if you happen to know anybody who might need to be looking at possibly buying a home, I'd like to help them too. So with that in mind, is there anybody I could talk to right now? I mean, this is what you do. This is how we operate.
And you know what I love about that, Frank, is that the borrowers, the non-QM borrowers, they understand that their situation is a little unique. And the fact that you, as a progressive loan officer, found a solution for them. So they're going to want to help you. So ask for their help. They want to.
They'll give it to you.
You help them. So
in their eyes, you're a great guy or gal. Yeah, he's great. So they've got their radar up. You're reminding them you're looking for business. When that conversation comes up with somebody out there, they go, I got a guy or I got a gal. He's great. Right? I mean, that's how this goes down. That is how this goes down. And here, I'm going to say real fast story. In 2006, I started doing coaching through a Brian Buffini. His big program was send your past client database something in the mail and then call 5 people a day and ask them for a referral. that was his big coaching program, right? 5 people a day, and before you hang up the phone, is there anybody else you know that I can help, right? So I
Yep.
started the program, 5 people a day. That's 100 in a month. I was a little nervous about it, right? Because I got some of these people I hadn't talked to in years. Regardless, I got through it. I did my 5 calls a day, and I did it for a long time. But my first month was very significant. It was very eye-opening to me. Okay. The cool thing is by doing it, I'm here to tell you, I picked up like 4 deals. Like my first month, I picked up just because I was engaging with my past clients and asking them for a referral. Here's the horrifying thing. I realized that in calling those 100 people, I lost a half a dozen deals because I was a great snail mailer at the time. I was doing snail mail, right? Regular mail. These days it's email things, right? We're doing emails. I was great at it. I was flawless. Every month I made sure they got something to mail. So when I got on the phone with these guys and I'd say, "Hey, it's Frank," they're like, "Hey, Frank, how you doing?" I said, "I'm good, man. How are you?" They'd go, "Oh, darn, shoot. Oh, man." I'm like, "What's up? What's up?" They go, "Oh, I just did a deal. I should have went through you." And I go, "Okay, that's okay." I said, "But I'm curious. Did you get my mailer? I mean, I'm selling." And they go, "Oh no, we got those. Yeah, we're getting that." And I go, "Okay." And I swear to you guys, every one of the deals that I lost was the exact same thing. And I'd say, well, "Okay, I'm just curious though. I mean, why didn't you think of me?" And I mean, it's all good. I understand, but why do you think of me? And the answer every single time, you know what it was? It was this: "I don't know. I was just talking to this guy."
Yep.
Okay. That's what it
They
was.
hadn't heard from you in a while.
They hadn't heard from me in years. Okay.
Yeah.
And they got my letters in the mail, but they hadn't heard from me on the phone. Right. And in the mortgage industry, how easy is it these days if you got a guy on the phone to get that guy through an application process, get him DU approved, credit run, ready to roll like that, right? Like that. It don't take no time at all. So critical here, critical. We want that residual income, right? We want that. We want those referrals out of that guy as we progress along. We have to engage. Very simple. No fancy CRMs. You can plug it into your goddamn calendar. Put a note in there to remind you what it is. Call Bill Jones. Bill Jones? Yeah. Yeah, the non-QM guy that you promised you were going to refinance him. The refinance date is whatever, right? Just put a little note so you know what you're doing. Make that call. Do not leave a voicemail, right? If you get a voicemail, just say, "Call me on your deal." They will call you back. Small talk. Make sure nothing's changed. You know what I mean? Ask them for a referral on your way out. That's how you do this thing, guys. Not only will you get this residual income down the road, right, from this refi, you're going to ensure you get that, but you're probably going to pick up a deal or two out of this guy along the way, if that makes sense. It's all about engagement, Tom.
Yeah, no, and I think that's kind of a perfect segue into like, where do you find the borrowers? Because it is really, we're going to talk about different segments, and like realtors, it's all about engagement. One story that I heard from another loan officer is that anytime they're working a non-QM loan, a lot of these are purchases, but they'll reach out to the selling agent and make sure the selling agent knows, hey, by the way, this borrower that's buying the house you are selling is a non-QM borrower, and that's a product that I offer that not a lot of originators are familiar with and comfortable closing. Can I buy you a cup of coffee after this loan closes? And guess how many realtors say no to that?
Yeah, not many.
None.
Yeah, no.
They're loving it because they're getting a transaction out of the benefit of non-QM, but a lot of them don't know it. So you, as the loan officer, have to make sure everyone involved in the transaction is aware that you are a non-QM expert and you are a non-QM loan officer, and educate them on what that means.
Again, engagement.
Yes.
Engagement. Hi. I'm awesome. Let me show you
Very
why.
simple. Very simple.
This is one of my favorite ones. Yeah, I like this one. This is one of my favorites.
Yeah, the other LOs. I mean, there are loan officers that either work for the big banks or credit union, or they simply just, for whatever reason, they're not comfortable with non-QM, or perhaps their company is not comfortable, whatever the case is. But there are lots of loan officers out there that want to help borrowers, but they don't have the tools that you have if you work with Angel Oak. So reach out to those loan officers. I mean, everybody knows a loan officer, probably at Bank of America or Wells Fargo, or some of your local credit unions.
Credit unions
want to take care of the borrowers. They just don't have the ability to.
So true story. I was doing a presentation on our listing booster product yesterday, and I had a loan officer on there, and it was actually a webinar for those who already have boosters. So typically those don't get that many people. So I only had a handful of people. So I had them unmuted so I could just talk to them, right? And so I had a loan officer and a gal, and she worked for a credit union back east somewhere. She worked for a credit union, and long and short of it. I asked, it came up, how much do you make on a deal? I mean, what's your average commission? Because we were crunching numbers is what we were doing. We were doing ask for the business. We were crunching numbers. Like, what do you average make? And she goes, I get paid hourly. I go, straight hourly? You don't? She goes, yeah, just hourly. I go, so you don't get like bonuses for the deals or anything? She goes, well, sorta, but not really. I get paid hourly. So there's these loan officers exist. These credit unions exist, right? Where you've got these originators who are literally sitting there waiting for bank customers to sit down to start a loan application. If the bank customer doesn't sit down, they're sitting around, right? Who don't do non-QM. They do not do them. And these are the ones that you could be talking to saying, if you ever run across a deal that you can't do, you want to keep your customer happy, here's my card. Send them to me. Just send them over to me. I've got all kinds of non-QM stuff. Doesn't have to be a government or agency stuff. I can probably get them done. Those people will refer you deals. But here's the thing, Tom: engagement, follow up. Got to stay in touch with them. You got to treat them like a real estate agent. You got to treat them like a referral partner. You got to drop in on them once in a while. Say hi once in a while. But if you do it, guess what? Nobody else is doing it. You'll get the deals out of them.
There's no doubt about it. It's a good one. Builders, same thing. Builders love to sell a house. Every house they build, they need as many potential borrowers able to buy a house as possible. So when they start non-QM, make those calls, go back to those relationships and let them know that non-QM is a part of your business and a product and a tool that you bring to the table that a lot, maybe some other loan officers don't, that they're working with.
Yeah, absolutely. You got some builder who's got some, big named bank in there that doesn't participate in non-QM doing the loans. I mean, you go in and scoop up the non-QM side of that stuff. Yep. Thank you. Why not?
Absolutely. Another just big category that I like to always bring up are accountants and financial planners. A big product. We're not going to talk about products necessarily today, but the bank statement borrower, the self-employed borrower, they have accountants. The reason they can't do a Fannie Mae agency loan or a straight prime jumbo loan is because their accountants are really good at writing off their expenses. So they qualify. But accountants know who have the borrowers that have really good cash flow and have the ability to buy jumbo loans and big houses and get a jumbo mortgage on it, but they know they can't qualify. So taking non-QM to accountants and financial planners is a great resource because, again, you just said it, Frank. Who else is doing it?
Nobody.
Nobody. So why don't you be that person?
Yeah, I mean, if you're I guarantee you these self-employed, heavyweights that write everything in the world off but make great money and whatnot, when they try to go get an agency deal and they're getting told no, you know who they're going to call? Their CPA. They're going to be like, man, I'm having trouble. Is there anything we can work here or something we can do? And if you're their pal, they're going to go, I got this guy or this gal who's, they specialize in self-employed. Here's his name and number. Here's their name and number, right? That's how that's going to work. But again, these guys too, Tom, we have to treat these guys like a referral partner. We can't just see them one time for lunch, give them their card, and 3 years from now go, I wonder why I never got a deal out of that CPA, right? I mean, we have to treat these guys like our referral partners. But if you do, you'll get business. In a year, you'll get business out of these people.
Yep. Back to what's that word? Engagement.
Engagement. You got to engage.
And then bankruptcy attorneys. That's just another group. A big piece of the non-QM origination are those borrowers that have had a foreclosure or bankruptcy and it hasn't seasoned long enough for agency or prime jumbo guidelines. So building those contacts and those referrals from bankruptcy attorneys is just a natural way to go about building the business and finding these borrowers. So
Good stuff. This is
Yep.
all good stuff. Yeah, let's touch a couple scenarios and just see how this all goes down.
Yeah, so these are just like these are real deals. I think it's really helpful for people to understand. We're not going to get into product guidelines, but just to understand what non-QM might look like. So this is somebody's president of casino wanted to move to a different part of the country, but they had a beach house that was a short sale in June of 2015. So they wanted to buy a new $1.2 million house, but they had a short sale not too long ago. So 700 FICOs, good salary, 90% jumbo loan is what they were looking for. So we got them into our non-prime product, and they closed in January of 2017. But then the follow-up, we know we can turn that into a refinance in May of 2019. So, that's the exit strategy. At the time of closing, the exit strategy is known, right? So you put your follow-up plan in place. Frank, you talked about quarterly phone calls.
Totally.
Whatever it is, just put it in place. That's how you build that residual business. You won't feel it until May of 2019, but when May of 29 gets here, or when May of 19 gets here, you're going to be really happy. It's right around the corner now, but it's just that's how this thing works. That's how the residual works. It's not the immediate payoff, but it's building that pipeline. So when you get to those time frames, every single month you've got some refinance activity happening.
Not to mention, along the way, if you're making your quarterly calls and asking for a referral, I'll bet you get a deal or two out of them. I'll bet you do. So that deal to you got 2 deals for the original guy, and even if you just pick up one, right, by asking for the referrals along the way, it's a 3-deal transaction. Do that math. I mean, do that.
No doubt. And you think about it.
A couple calls?
Yep. And when somebody buys a house, that's kind of that's at the top of their mind, where they, a mortgage. And so when they're meeting new people, maybe in a new area, hey, who'd you get your mortgage through? Oh, well, I got it from Frank. You should call this guy. He's great. But that's only if you're that person that's kind of always asking for those referrals.
Engaged. Got to be engaged.
Yep. So we got another, as a doctor moved across country, another short sale, 2014, 705 purchase price, 700 FICOs, good salary, another 90% jumbo. They closed in July of 2017, scheduled to call them in December of 2017. Here's what's nice is that after a little over a year, that put them at a different category. So this loan officer was able to bump them from one non-QM product to a kind of a higher level non-QM product.
I see.
After August of 2018, there's another opportunity to refinance them into a prime jumbo.
Yeah.
So this is a borrower, just this one borrower. Again, forget the referrals, forget all, everything else. This is a free loan transaction for this loan. But the critical piece is the engagement. It's the follow-up. It's being good about that piece of your business.
Yep. That's what it comes down to. Good stuff, man. Good stuff.
Yep. So here's another one. We had a borrower whose FICO was 1 point below that big jumbo, right? 679. So everything, good salary, good everything. Closed in November. There's the rate. It was a condo. Prepped them ahead of time for the refinance, and then the following year put them into a Fannie Mae loan.
Yay.
Yeah. This would have been.
I need to point this out to you guys. It's when we look at non-QM, we didn't really open with this, but a lot of times we do. It's like non-QM doesn't mean it's all bad credit. I mean, obviously, self-employed borrower, great FICO score, putting money down, but tax returns don't show any income. That's not a bad credit borrower, right? It's just it's an out of the box borrower. Doesn't fit into the QM. That's what these deals are for. And jumbo is a big part of your business too. I know, Tom, because jumbo loans on the prime side they're tough puppies to get. They're not so easy to get. But on your side, it's like we've got flexibility. We can get them in, you know what I mean, and work on them down the road. It's really great stuff.
I think you've used the term for it. It's kind of makes sense underwriting, makes sense guidelines, good borrowers that have an ability to repay. But yeah, I think our average FICO has crept north of 700. So this isn't like and we used to talk a lot more about this, but this isn't subprime of 2005, 2006. This is really non-QM of 2019, and those borrowers look a lot different.
They do. Yeah.
Good, really good point.
Yeah. It doesn't mean just bad credit. It means just not in the box. Not in the prime box. That's what it means.
No doubt about it.
Cool. Yeah, we're gonna go to a quick quote here.
Well, so yeah, we talked about what sourcing them and scheduling them. Making sure that's a big part of what you do. Where to find them through the realtors and builders and things like that. So then you find the borrower. What do you do with that? And I think that's just kind of something we should talk about. So if you leave with a couple things from this presentation, one is just please our website, angeloakms.com. And if you go on there, there's lots of resources, but our most popular place is right here. It's called Quick Quote. And when you click on Quick Quote, it just pops this page up right here. And this is our quick quote, and it is just that. It's very quick. And I don't know, Frank, I know we asked early on in this if anybody had any scenarios to
Yeah,
shoot.
let me check. Let's see here. Yeah, okay, here's one. I got one here.
Okay.
Okay, it looks like they closed on a $1.3 million home. Family was turned down by two other lenders due to a foreclosure.
Okay.
2 years ago. Foreclosure
All right.
2 years ago. FICO 672.
Okay. All right. So here's a foreclosure. We can. Sorry. So foreclosure 24 months. Okay. So what was that?
Yeah.
FICO again?
672.
672. So you find the bucket, the loan amount. I think you said about $1 million or so, or.
Yeah.
Okay. So $1 million. Did it have a loan to value on there, or is that just?
This one doesn't. Let's just go with, let's look at that.
Okay, got it. All right, so we'll say the last 24 months, they were 0 times 30. So we know that foreclosure was greater than 2 years ago. So you just answer those few questions there, right? Loan, FICO, loan amount, loan to value, and their recent housing history. And it just pops up immediately some options. So here's an 80, we asked for an 80%, gives you a night, what we can actually do. We can go all the way up to 90 with no MI. So none of our products carry mortgage insurance on them. Gives you the rate right here. If you're signed up with this and your company does lender paid compensation, it would give you that rate. And then it has bankruptcy and foreclosure seasoning. I think you said that one was more than 2 years ago. So, this would require 4 years, but here we have Portfolio Select, which allows 2 year seasoning. So it's all right here. It's super quick, super fast. You can change anything. Let's see, I just changed the FICO and it just updates the approval at the bottom. Like with a higher FICO, you could do up to a 95% for this borrower. So really quick, really simple, just kind of gets you an idea of, is there a potential loan for this borrower?
Yeah.
So that's why we call it quick quote.
Nice. It's awesome. You got a deal on $1 million loan.
How about that?
Yeah, on $1 million. Here's another one. Looking at like this is a loan amount's $475,000. Okay. The FICO was a 614 FICO.
Okay.
And
right.
looking at a 90 LTV on that, I think.
Okay. All right. So Yep. All right. So on that, with a 614 credit score, which is that bucket, our maximum is going to be 85.
85. Okay.
You ask for a 90, it tells you real simply, here's the 85 that we can do.
Let me ask you this: in that scenario, gift funds okay?
Absolutely.
Oh, there you go.
Do them all the time. So I just changed it to 80 so you can kind of see 80.
Got it.
85. Gift funds, like you said, gives you some high level things. 24-month seasoning from that bankruptcy or foreclosure. Here under non-prime, we only have a 12-month seasoning. So just really depends on what that borrow scenario is. But again, quick, it gets you started. From here, you click pre-qualification request, and that goes to your account executive. You upload the 1003, the credit report, and they're going to get it, and they're going to get you something back in writing that tells you all the details about the loan that borrower would qualify for.
I got another one here. It's kind of an interesting one, and let's see
Okay.
what you think about this.
Okay.
I think this might be right up your alley. Okay, so this gentleman has a customer who's got 10 million bucks in stocks and bonds.
Okay.
Got a lot of reserves. Okay?
That's a good start.
Just lost his job. Okay. Doesn't want to go back to work right now. Wants to take a break. Okay.
Yep.
And he's looking to purchase a non-warrantable condo for 1.4 million.
Okay.
So with that in mind, and he's got a 780 FICO. Okay.
Yep. All right.
So what our guy here is looking for is like, can you do that at what LTV would you be able to do? Could you do it? And if you could, what LTV? Is that something that might work?
Well, so that one's a very, very specific product. That falls into what we call our asset qualifier. So
Okay.
that's a borrower that, just like you said, we're not going to look at their job, but we're going to look at their assets. I mean, logically, if you were lending out money and you know somebody has 10, I think you said 10 million in the
10
bank,
mil. Yeah.
and they want to borrow 1.2 million, or pick a number, that seems like a reasonable risk, right? The assets really to pay cash.
That's what I'm saying. It seems like it's an okay deal.
Yeah. So we have an asset qualifier, and that's a loan. I don't have the details off the top of my head, but
okay. All right.
I'm sure that's at least an 80% loan that we can do for that borrower. Our asset qualifier has become a pretty popular loan as of late. So absolutely have a home for that.
Okay. Another question here. Just confirming. It says so we can do 100% gift at Angel Oak is what he's asking.
Yes. Yes. Absolutely.
Good stuff. Good stuff.
So we like to say that the borrowers that have assets or access to assets.
Gotcha. All right. Well, that's about it for now.
Okay.
What else we got?
Let's see. We got a couple more minutes, or just I think just on our website again. Once you're approved with us, you have access to marketing tools. So
Yay!
Videos, that kind of stuff. We're going to help. We're going to give you the tools to go out and engage with people. Print out flyers, drop them off at offices. And by the way, they're not Angel Oak flyers. They would be your flyers. So it has all the pertinent information about the products, but then you put your logo and your contact information. It's basically your flyer.
That's cool.
QM products. So
now when I'm going out to see that credit union loan officer, I've got something to hand him or her. When I'm going to the CPA, I got something. Of course, when I go to Realtors, I got something to hand. I go to the builder, I got something to leave them with. You know what I mean? Yes. And it's all branded to me. I just get approved with Angel Oak. I can get in there, brand the flyers to me, and I can do some field work, man. Field work is a lost thing, man.
Knocking on doors, Frank. It's a lot of fun.
Dude, I got into the industry.
Try it if you haven't done it in a while.
I got into the industry in January of 1987. Okay, and when I got into the industry, dude, I swear to you, I didn't even get a pager for almost a year. You know what I mean? It was like there was no cell phones. What they were big and clunky, and if you had it in your car, it was actually bolted into your car with bolted-on antennas that came out of the window. So, but the point I'm trying to make is that going in the field was the one and only way that we got our business. I mean, we were out. Right. You came into the office, got caught up on everything, saw what you had going on, and then you got your stuff together, flyers or whatever it was, and you were out. If you were in the office, you were not doing your job. You were out in the field, and there's something to be said about doing that still. I mean, we need to get back to that. I tell you guys, I don't care how popular somebody is on Facebook, some loan officer, if you're in the real estate office every week saying hi to people and schmoozing with them, you're going to get the deals. That's because you're there. Right. You're there.
I agree with you, Frank. It's kind of a lost art, isn't it?
It is, man. I just think that we need to get back to it. We just really need to get back to it.
Well, so when you want to, we give you the tools to take things with you. You can take these flyers and you can use today's marketing techniques and social media and put them out there. And so there's so many great useful uses of this information, or of these flyers that are customized to you. take them out in the streets with you, and put them on social media at the same time.
Great, man. Well, this is good stuff, man. Do we have a parting slide, or are we done here? We will be emailing you guys. We'll get you assets from this webinar, the recording, all that good stuff. Ways to reach out to Angel Oak. If we missed a question there, don't worry. Somebody from Angel Oak will give you a call. Here's their contact information right on the screen here. But with that, I think we'll go ahead and wrap this one up and put a bow on it.
I think we should.
Yeah. Plus, you and I got another call we got to be on in like 6 minutes, so we got to go anyway.
Yeah, you got it.
All right. And just as a reminder, guys, if you happen to be in the Houston area, or if you happen to be in the Irvine area, we're going to be doing a Diversify and Thrive Summit in Houston and in Irvine. Angel Oak will be there along with myself, and of course we'll have with us Remen talking about renovation. We'll have Liberty Home Equity talking about reverse, and of course Angel Oak there talking about non-QM. But just to be a great experience to come out there and learn about all these different products that are available and strategies on how to go get that business. And of course we're gonna have some cocktails afterwards and just hang out and talk to each other. So you can go to the website. What is it? It's Diversify and Thrive.
Diversify and Thrive. Yeah.
You can go to the website, Diversify and Thrive, or you go to the National Real Estate Post. There's a banner in the upper right-hand corner. Click that. Houston, Irvine, February 5th for Houston, February 12th for Irvine. We'd love to see you guys out there where we can engage with you.
Those are going to be great events.
Yeah.
Looking forward to those.
All right. Well, I think that's it, buddy.
Awesome. All right, Frank.
All right. We'll catch you guys later.
Have a good one. Thank you.
Bye.
Bye.